Money FM 89.3, best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture with me, Ryan Huang. And we are taking a closer look at the Singapore stock market, where recently a slew of measures by the Monetary Authority of Singapore to reform and strengthen the local stock market has drawn a lot of interest, and this all in the name of helping to bring more listings and raise investor interest in the local stock market. We've seen on the proposal table a $5 billion program through which it will partner with selected fund managers to invest in Singapore stocks. Also ideas to streamline regulations to help facilitate listings, among other measures. So many aspects to this challenge, especially in view of how a growing number of local investors are drawn to overseas markets. And to help us unpack even more ideas of what could be done to address this challenge, we've got James Leong. He is the CEO of Grasshopper Asia, a leading asset manager in Singapore cash equities. James, good morning. How are you doing today?
Good morning, Ryan. I'm doing great.
Great to have you on because you're in the know and right in the middle of what is happening for local markets. Give us a bit of an overview first. What are some of the challenges you've seen facing Singapore markets, especially in view of how neighboring exchanges have really stepped up when it comes to competing in Singapore?
Well, I think the first and foremost biggest challenge is that there's not enough participation. I mean, here in the finance world, we call it liquidity. And that lack of liquidity basically means that there's not enough interest in the stocks. Therefore, the prices do not reflect the real value of a lot of the stocks. Hence, you have issues with getting participants like institutions in. I think first and foremost, we need to try to focus on bringing retail players back to the market. And that's the very first step I think we need to work on.
Yeah, so liquidity brings to mind, folks like you and me getting into the market. And to some degree, that is a challenge. So what can we do to ease the practice or participation of these retail investors?
Well, first and foremost, we have to kind of recognize that we are in this situation where the SGX is being compared now globally, right? The global choice, the availability of virtually free commissions of trading into the US, cryptocurrencies, all these vibrant, exciting, volatile products exist, and now they are very, very accessible from everybody's phones. So from that first step, we have to realize that we have to make SGX more attractive vis-a-vis these products. Cost of trading hasn't really been reviewed for a while. Things like bought lot sizes and minimum commissions make it difficult for newer participants to come in. And these are the very actionable steps that can be taken to bring retail players back in.
Yeah, we've seen the lot size, for example, drop from 1,000 to 100. Do you think that's helped, and should we do more on that front?
I think that's helped for sure. But coupled with certain brokers and banks still charging some minimums, I think that still makes it challenging, right? It's difficult to pay a $10 minimum when you're buying $100 to $200 worth of an investment. I think we want to make the products that are fairly attractive available to younger investors, to newer investors, and get them to understand what stock market trading is like. I do believe that that's what we're competing against. So I think that's an unfortunate bar that's been set. And with virtually zero commissions and very proportionate commissions in these other products, it's hard to compete.
Right, let's talk about what else can be done when it comes to market structure and perhaps some of the free float rules. Are there any things that come to mind when you look at potential changes that we could look at?
That's a great point. I think fundamentally, I look towards one country in Asia that has revamped their stock market rules significantly over the last 8 years to solve a very significant problem, right? Like Japan worked very hard on their deflationary issues over the last decade and has finally come out in the last 2 years, which is a significant milestone. And as part of their efforts, they revised their stock markets to enforce more free float, to change how companies reinvest their capital. And that has actually helped market participation. Smaller investors are coming back to the market. And this is in spite of a significant capital gains tax in Japan. So I do believe that emphasizing greater free float and enforcing it on smaller companies would actually help participation significantly.
Okay, and you also have a view on how perhaps we can encourage more retail participation in terms of maybe encouraging them through various incentives, information, creating a more vibrant ecosystem. What do you think has changed over the years, and what do we need to change?
There has been a significant change in how media is consumed. Our ecosystem has dramatically consolidated in the last 20 plus years. In the past, I would say remeasures played a key role, and that is no longer the case. Banks and the number of brokers has also basically been reduced significantly as corporate consolidation happened in the 2000s and 2010s. And the first step, I think, really is an effort towards promoting financial education in schools and in late teens, early adulthood. I do believe that there is a lack of true understanding on the financial products and the basic tools available to people to manage their money. But beyond that, I think we have to realize that we are a really attractive and safe venue, that actually can distribute our products to a greater ecosystem of the whole of Southeast Asia, where there's almost 700 million people, right? The same mechanism that brings the US markets and other markets, make them very available to Singaporeans, it's also available for us to use to distribute our market to the greater region. And I do see that as an opportunity because all the Singaporean stocks that have listed in the States have seen significant volatility, right? Like 60 to 80% price movements over like a period of a year. And that's not healthy for some of our best and biggest stocks. I believe it's very hard to attract attention and proper investor interest when it's a 12-hour time difference for when the stock and the market operate. So I do think if we distribute more broadly regionally, I think that will really help our base of liquidity and the ecosystem.
Yeah, I remember back in the day, we had the remeasures, and then you've got a very vibrant community sharing ideas, what's the next hot stock and so on. That helped, I believe, to some extent, drive interest. Do you think influencers are adequately filling the gap on the front?
Well, Ryan, I apologize, but I do see a bit by media feeds, but not a whole lot. I do think that they are fairly influential because otherwise, how would the younger Singaporeans and generally very internet-savvy people get access and information about the US stocks? I think that ecosystem is very well developed. And with just a little bit of prodding, I think Singapore can also build up that infrastructure. I don't think that there's currently enough knowledge or even awareness about the key stocks in Singapore. So short answer, yes.
Okay. You mentioned products as well. That could maybe drum up interest in local participations. Should we be looking at more trendy, shiny things like crypto ETFs, fractional shares to bring in the younger crowd?
Well, I think Singapore is very, very keenly aware of its position as a fairly risk-averse venue, right? And if we're going to continue the strategic positioning, I think that needs to be considered. But I do believe that there are already a lot of opportunities even in the regulated market space for interesting shiny ball products for us to trade. I think some of the efforts that the SGX have made have been very progressive. Lots of dual listed stocks of interesting companies in the region all the way up to Hong Kong. And these are interesting opportunities. So I do believe the team in the SGX are trying their best to find great shiny balls, as you referred to. I do think that they are very wary about things like cryptocurrencies until there's more clarity on the state of the regulations globally.
All right, one step at a time in the right direction. We've been in conversation with James Leong. He is the CEO of Grasshopper Asia, a leading asset manager in Singapore cash equities, helping us to paint a picture of what else can be done to address the challenge facing Singapore markets to revive more interest and participation and even draw more listings. James, thanks so much for your time this morning.
No, thank you, Ryan.
All right, great having you on, and we'll catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.